let's start with your big market, Saudi Arabia. Talk to me about the health of Saudi consumers. Why do they appear to be spending less at your stores?
We see a decline in like-for-like sales given the change of consumer trends in the market. Consumers today are spending less and discretionary spending has declined. However, we see a big potential with affordable jewelry. This is the fastest growing segment around the world and the region, and that's why we decided to make an acquisition to enter for the first time this significant segment of affordable jewelry.
Selim, a very good morning to you. It's Manis alongside Yusuf. Of course, you're referring to the Tous brand, which is about affordable luxury. I mean, this is quite a big call. 22 stores in the kingdom, 620 stores worldwide, 53 countries. Just how much revenue can this add? How big can Tous be in terms of the Lazoud brand?
The Tous acquisition is a very strategic development for the company. It puts Lazoud in a much stronger position for growing in the future. We are complementing our assortment. We're adding immediately revenues and profits. We are putting a much stronger growth platform. If you look at 2017, we would have grown in 2017 our net income by 60% if you combine Lazoud plus the Tous net income.
Selim, just stay with us, sir. It's one of those days we've got breaking news aplenty. This time from Zurich Insurance. Of course, Munich had a miss, Allianz had a beat. But on Zurich, $1.79 billion. That's a beat. On $1.74 billion. Of course, they took a bit of a pacing in the first quarter on the property and casualty side of the business. They've got stronger pricing in the United States of America, according to BI, and Zurich is confident in delivering on its targets. So that is the message from Zurich Financial. Of course, dollar rates are rising. This adds momentum to all of the insurers. So net income, $1.79 billion. That's a comfortable beat. They're confident on the year forward. We will have a conversation with the CEO, Mario Greco. That is at 10:30 a.m. Dubai time.
Let's get back to the conversation with Selim around, jewelry in this part of the world and generally health of consumer spending. You mentioned some of the weakness in Saudi Arabia. I want to get a sense of where you are aligning your priorities for the next couple of quarters. I mean, is this a chance to shift away perhaps from your Saudi exposure a little bit and focus more on other markets like Egypt and maybe enter new markets? What's on the horizon here, Selim? The
Egyptian market is doing very well for us. We have a very strong position in Egypt as a leading brand there since more than 15 years. Year to date, we see a big increase in consumer spending and our sales in the wholesale and in the retail business. And we are currently building on that momentum to make Egypt reach back the levels it had a couple of years ago before the changes occurred in Egypt. So this is number one priority for us to grow Egypt. Number two, the priority for us remains our backyard, Saudi Arabia, where we have a very strong position since many years. And here we will focus on the perfect integration of the Tous franchisee acquisition. Number three, priority remains on the GCC markets. We started doing some exports to countries outside the region, but those efforts will take some time to give some material impact on the profitability of the company.
Now, we can't let you off the hook. We've got gold trading at $1,214. It's trending one way. So the market should expect the input side of your business to improve quite dramatically. I mean, we've come back from $1,360. We're at $1,214. Where does gold go to?
Gold price did help consumer spending this year, definitely. The forecast we look at all tell you that the gold price will be around $1,200 to $1,300. We don't see any major increase. We don't hear about increase of the gold price. Can it go further down? Maybe. We don't have any direct exposure to gold price. We don't take any position on gold, but definitely this gold level is helping consumer demand across the region.